Hey guys, this is Jim Sukalis with Keller Williams Realty, mortgage loan originator. This video is going to be about your money sitting in a bank and your account earning less than 1% currently. Inflation is still running above 2.5%, and America is now paying $88 billion a month just in interest on its national debt currently. And that's the same as the defense and education budgets combined. So I just wanted to make this video for you. Let me connect the dots for you a little bit to see what's going on here and how we can get the big picture. The Federal Reserve is currently holding the benchmark rates at 3.5 to 3.75%. That's the second straight meeting that they've held already, and they chose to hold the rate steady. Right. Jerome Powell's term as the Fed chair expires on May the 15th, and President Trump is already nominated Kevin Warsh to replace him, Jerome Powell. Right. So now a new Fed chair cannot wave a magic wand and solve all America's financial problems. Right. You know, the Fed, of course, influences short-term borrowing costs. And let me be clear, it doesn't directly set your mortgage rate and what you're going to see in the market. Markets are already priced in one possible rate cut later on this year, possibly, but the timing is uncertain, especially with all activity happening in the Middle East currently. I personally expect rates to stay the same, if not increase throughout the year. They're probably going to go up for sure, slightly. So with our Iran and the Hormuz Strait in China, this is the part where it gets real, right? The Strait of Hormuz is the narrow waterway that carries roughly 20% of the world's oil and gas, right? So it has to go through this portion of water. So it's been blocked since February, late February, when the United States and Israel launched airstrikes on Iran, right? But here's the part no one's talking about. Iran kept shipping oil through that strait the whole time. So, and every single barrel went to China. China is spending money with Iran currently and exchanging goods with them. According to CNBC and Tank Trackers, Iran sent at least 11.7 million barrels to China after the war began, all under their escort. China pays in yuan, not the US dollars, so that kind of affects the US dollar, makes it weaker. Iran and China have a 25-year strategic partnership signed in 2021. So even if the US backs out or tightens sanctions, Iran has a buyer. China has the oil. They don't need us in that transaction. So what that means for you and I, energy prices are going to spike, shipping costs are going to rise, cost of goods to grocery store and gas tanks, it's going to cost more to build house, and the material prices, they're going to go up. Inflation is going to stay sticky, and mortgage rates are going to probably stay elevated, right? So, you know, the national debt just crossed $39 trillion. That's over $113,000 for every single person in the United States of America. So the interest expense alone is forecast to hit $1 trillion this fiscal year, according to the Congressional Budget Office, right? So it already surpassed both Medicare and defense as a budget category, right? So, you know, and your bank, you know, the net, you know, personal savings account is around 0.59% APY, you know, per year. Inflation is running around 2.7%. You know, there's the gap right there. So your dollar is quietly losing real purchasing power every month. It sits there doing nothing in a savings account or a checking account. It's not about panic. It's about awareness. Your money needs a purpose, right? So what does this all mean? If you're trying to buy a home, wherever you are, particularly in Southern California, Los Angeles, San Diego, Rancho Riverside, Inland Empire, anywhere in Southern California right now, your dollar is no longer you know, holding its value as it would as if it was strong, as it has been in the past. Mortgage rates track the bond market, not the Fed directly. So when oil shocks, you know, debt fears and inflation uncertainty hit the bond market, rates don't just drop because you're hoping they will, right? So, you know, for the first time buyers out there, and your challenge is not going to be just be affordability. The question isn't just what's the rate and what's the payment. It's going to be what programs exist to make it work right now, and the payment that you're going to be able to afford comfortably. The sellers uncertainly slow buyers. When headlines are noisy and loud, confidence drops. That means pricing and presentation strategy matters more, not less. A lot of people not going to want to drop the price in this type of market for their property and listings. The people who do well in the markets like this are not usually the loudest. They're the clearest, right? They understand the numbers, they understand the timing, and they know what strategy is going to beat those emotional challenges every time. They have family planning, they have budgets, organizing their household accordingly, making meaningful budgets, purchases, and investments that are not as skeptical, but they're going to be actually proven, to make good returns. So in closing, this is for educational information only. This is not financial or legal advice. But if you want a clear breakdown of your buying power and your mortgage options, or what today's market actually means for your next move in real estate, go ahead and reach out. Let's look at your real numbers together. My name is Jim Sukalis. I'm with Keller Williams and Keller Home Loans. We're powered by Mutual of Omaha Mortgage. You can go ahead and reach me at 424-450-7525. Thanks for checking out the video. All right.